Christian Dorsey, director of the Economic Policy Institute. Christian, I'm going to let you have first shot at this one because I have some strong feelings about having her here. I want you to get in your argument. What do you think?
Well, I think you'd be hard-pressed to find someone who brings more experience, not only historical, but recent experience from her time as the head of the Congressional Oversight Panel on the TARP bailout, someone who has more current practical experience in the banking industry to actually serve on the Senate Banking Committee. You're going to find someone, you're not going to find anyone with more experience.
She doesn't have any banking experience at all. I mean, she's a lawyer and a professor. She doesn't know anything about banking.
Melissa, she was in charge of investigating the congressional TARP program. She knows the banking industry inside and out. She knows how they operate. She knows the systemic problems more than really any other singular person that you could think of who's not actually a worker for the banks. She acquitted herself quite well.
I don't think that's true. I think she is. I think she's a zealot, and her opinion of what's wrong with the banking system is terrifying. Here are her own words. She says these credit products have been designed to trick people. They don't expect to be carrying around a loaded weapon in their pockets that may fire and shoot them at any point. I don't think of my credit card as a bazooka in my pocket that can blow me up at any moment. I mean, these are credit products that people willingly take and use so that they're able to finance purchasing things that they can't afford to buy with cash. And she's likening it to a weapon. You don't think she's a little extreme?
For you and me, Melissa, who have good credit and who use these things responsibly, they're certainly not weapons. But you have to acknowledge that there are a great many credit products out there that are designed to lure people in and then change terms on them to make the credit wholly unaffordable and put people in a very difficult place. And that's what she's referring to.
Christian, that doesn't make any sense, because if a credit card explodes to a level where somebody can't pay it back, that's not good for the bank or the credit company. They don't get their money back. I mean, they can charge all the fees they want. The people default on it and they never pay. They don't want to trick and trap people because they don't get paid.
Melissa,
it's not in their financial interest. They don't get paid. People
Melissa,
just don't pay on the card and they go bankrupt.
They write it off. They write it off and they get exorbitant fees in the process. Now, Melissa, the whole concept of predatory lending is not alien to you, right?
It is, in fact. I think the term predatory lending is like jumbo shrimp. You're tricking people into taking money from you. They're taking money from you. You're lending them money to go buy a house. Predatory lending? I mean, it's an oxymoron. You're going to go out and trick people into taking cash. No, I don't. That's insane.
You will if the money that you make on the fees more than offsets what you're paying out, particularly if you're securitizing that mortgage, for example, and making it someone else's problem as to whether or not they collect. That was clearly a problem in the 2008 financial crisis, and she's speaking truth to power about those practices, and that's why the industry fears her.
Here's I don't know what truth to power is, but let me give you another quote. She says if the Consumer Financial Protection Bureau had been in place a decade ago, the subprime mortgages that were sold to families across the country would have never been marketed. Here's my fear. The reason why subprime mortgages exist is for people who have, fairly poor credit, who are a risk. So the bank is taking a gamble on them, and obviously they're charging them a higher rate because they're a big risk. If those products don't exist, then there's a whole bunch of people who can't buy houses. Are you okay with that? Do you think that makes sense?
I think it makes sense to the degree of looking at the subprime mortgage market that was designed to give people who are not credit worthy with low or no documentation loans that would become unaffordable in the period of a year or two. People got those mortgages with the expectation that their houses would continue to increase in value. And when that all collapsed, you're talking about a huge financial instrument that is now problematic for the whole economy. That needs to be regulated very firmly if we're not going to avoid the incredible meltdown that we saw in housing, for example.
Yeah, I don't know. I mean, it's just an interesting question going forward. Do we want to cut off credit to a whole part of the market because their credit rating is lower and it costs too much to lend it to them? It's go ahead. I mean, we got to go, but I'm going to let you get in the last word.
Yeah, I don't think we're saying that. It's a matter of making sure that credit is lent responsibly in a way that's not only responsible for the homeowner, but also for the lending institution. And that's what she's talking about.
Christian, I love it when you disagree with me. Will you come back and do it again?
All right, Melissa.
Okay. All right. Here is my question of the day. How big